hold your question for the Q&A session. So one by one, we will take the questions towards the end of the session, and request cooperation and patience from all the participants. And from here, I hand over to Mrs. Suhail. Mrs. Suhail, please, you can start. Thank you very much.
Okay. Bismillahirrahmanirrahim. Thank you very much, Mr. Khaja, and our president of the branch council here in Saudi Arabia. I really appreciate for giving me opportunity to share the knowledge that I've gained over the last 22 years. So the topic is, as Mr. Khaja said, that's international oil demand, supply, and pricing mechanism. It's a huge area to actually to discuss, and it can take hours and hours to do this discussion. We have to actually shrink it in 1 hour, which is like जैसे कहते हैं कि दरिया को कूजे में बंद करना. So that's what we will do there. We'll do over here. The objective here, the agenda of the session. We'll discuss about the objective. I'll give you a little bit historical view of the crude oil to give you actually and link it all the things that what we are seeing today in the past, so we can actually connect with the history, see what's happening in now, and then we're going to go on the future outlook, how the oil going to be actually in the future. As an objective, there are three actually objectives that we have here in today's session. One is actually we have to look at that supply part, demand and storage. Second, we have to look at how the oil pricing mechanism works and what are the really factors that impact these pricing. And in the last, we're going to look at how actually the future outlook for the crude oil is, and where we're going to be positioning actually, and how actually the big companies are positioning in the world. So let's start with the history of the crude oil. That crude oil, basically, what we say petroleum. Petra, it's a Latin word. It's a petra and oleum combination.
I'm sorry, Sohail sir, just a moment. Your screen sharing is off right now, so we are unable to see your screen. Can you please turn on the option again so we can also see your presentation?
Sure. Is it okay now?
No, sir, it's not visible from here.
Please confirm if you can see.
No, sir.
Is it?
Not right now, sir. Sir, what we'll do is you just carry on, and we'll display the presentation from our end.
Okay.
It will take a couple of minutes, so you just please carry on with your presentation, and we'll display the presentation from our end.
Sure. Okay, I was just talking about this history of crude oil, that crude oil is basically the word petroleum. It came from this Latin word, which are two words basically, petra and rock. Petra means rock and oleum oil, so it's a oil coming from the rocks. It's also called fossil fuel, hydrocarbon. There are so many names in that. before actually we start using this oil, what we use for all different purposes, the oil was used for centuries. People always knew about oil, and the bitumen, that's if you can see actually in the picture, that's it's a black thing that the people knew a long time, centuries, and they were using for as a sealant material and for the medical purposes in the past. That's the first, actually, that's the modern history of oil that what we can see today. It started from 1846 and it's going up to 1900. Started from Baku in Azerbaijan. Then the fuel rush or this fossil fuel rush started in Titusville in Pennsylvania. And the modern name, actually, people, you can see that it's a black gold. So it's a very, very important commodity in the world, which drives the whole economies, even the economies that of the world. A lot of commodities that, other than this one, people are dependent on this commodity particularly. If we look at that in up to 1846, that was basically where these oils start coming in from the different areas in the world. Then we go to 1900 era, and it came so fast in 1900 that about 1,500 oil companies got registered in Texas and in Titusville in Pennsylvania. And how the oil started coming in, and the people got rushing actually to these areas actually to become part of this industry. Then we go to in 1910, 16th century. That's this.
I'm sorry to interrupt you once again, sir. The presentation is on screen right now. If you can just, can you view the screen? If you can just say next, and we'll be changing the slides over to you.
Okay, that's fine. Okay. So when we go to 1900, in the start of 1900, 1910, that's the big oil reserves discovered in Venezuela. Then the things could start coming up actually in more areas. Back in 1933, the first oil contract, the drilling contract, had been made by Saudi Arabia government and with the state oil, Standard Oil, in 1933. Then the new area start discovering actually in this oil industry, and where actually this modern offshore rig and the drilling got started back in the U.S. in the Gulf of Mexico. So where the offshore oil started coming in and the oil supply got increased. Next, please. Okay. In 1916 to 1948, that was a very important era in the oil history, where the more automobiles start coming into the market, and our automobile actually they start using the fuel. Then the ships were converted actually from mechanical system to using the heavy oil for transportation purposes. Aviation industry started booming, and World War I and World War II started. So there was a lot of actually the direction of the oil got used for the different purposes in 1940 up to 1948. In 1955, the more investment got actually coming to the projects, where actually most British companies, they were occupying the oil drilling activities in the Middle East, particularly. There's a big move actually started in Iran at that time, because Iran was actually the highest oil producer at that time, and because all these properties were owned by, are run by British companies, so they nationalized the companies, and where actually they toppled the government. So you can feel that's how actually this oil started to be a kind of big tool to topple even the government. Then if you connect to the same era, that's the 1960, there's a big move in the oil history. The big 5 producing companies, they started OPEC, the Organization for Petroleum and Exporting of Petroleum Exporting Countries, in Baghdad in September 1960. Then gradually, actually, these members got increased, and which are now 13 until actually the Qatar left in 2019. So now it's 13 countries, but actually stayed for 14 countries for a long time. At the same time, the US production got reached up to the peak, and the oil price globally started controlled by the OPEC. And 1973 is a very important moment in the oil history when in US particularly, all those countries that they were actually supporting Israel against the war in the Arab War in 1973, when the embargo got started, and all the big these OPEC countries, particularly Gulf countries, they stopped actually exporting the oil, and even this oil actually was embargoed by those people those nations that they were not only US but also the other nations that they were supporting this to Israel. So 1974, so when the prices actually even went to up to 400 times 100% that's of the oil due to this war. 1979 was another important era where the Iranian Revolution started, and the US and Arab world got kind of shaken. There was a lot of oil reserves that were in that area, so that impacted also the price. Then 1980, Iran-Iraq war. Then 1991, there's another first Gulf War, Iraq invasion of Kuwait. 2003, then US invasion into Iraq. So I'm just adding actually all these events because to just give you a kind of glimpse of actually how this commodity is being used as a big political commodity in the world to control the economies and to control actually the nations and control the different actually the powers. So the oil went up and down due to all these events. So now we go to just look at that, how actually this existing world has oil reserves and supply. Before we have to go about understanding about the numbers that where the reserves are, when we say oil reserve basically is an estimate because nobody can go actually personally or physically down in the hundreds of feet in the ground to look at how much the oil is. So there is technology used which estimate that how much actually the crude oil is located in a particular economic region. And that's a very important thing, that this oil, how much this oil can be reasonably extracted under the current condition and the current technology constraints. So if the oil cannot be actually extracted from these regions or particular areas, they are not being considered as a proven reserve. So if any oil with the reasonable effort can be taken out from these areas, then that we call the economic reserve or proven reserve. Very important thing that in the reserve part, that these proven reserve based on probability, that's how much actually we can withdraw from these reserves. So that estimate we can see actually in the media today that US has that many reserves, Saudi Arabia has that many reserves. So all probable reserves. So they are not actually, nobody can say with certain level. Yes, they are actually, as the technology is going advanced and more modern, people can actually be more confident to give the numbers. The next one, the oil reserve. These are the top countries that they are the highest producing oil producing countries. Venezuela, they have the highest reserves in the world. Second is Saudi Arabia. Third is Canada, and fourth is Iran, Iraq, Russia, Kuwait, UAE, US, and Libya. So these are the 10 more oil producing countries in the world. And 1.3 trillion barrels have been actually identified that these are the proven reserves of the world. And right now, the remaining reserves in the world are 1.5 trillion barrels. I need not to explain actually the barrels because the crude is measured in barrels, which is equal to 42 42 gallons, US gallons, and it's actually the world denomination for measuring and trading the oil. And if we look at these reserves, that how far these reserves can go, before this COVID-19, it was estimated that these reserves can last about 47 years of the world. But as about 30% cut in the oil demand, now estimated that these reserves can last maybe the next 60, 65 years. Next. Okay, on other side, that if we look at the reserve, that how these reserves by region will last. As I said earlier, that these reserves are measured that reserves production ratio. So from these reserves, how much actually we can get the production from that. So based on that, in the different regions, they have a different lives in that. In North America, according to them, that it can last about 30 years. In South America, where the Venezuela is located, it can last about maybe more than 125 years or 140 years. Europe has the smallest one, it's less than maybe 5-10 years. Then there is a Asian state, the Central Asian state, what we say, they're gonna last about 27, 28 years. So similar like that. In Middle East, that they estimated about it can last about 70, 75 years. And we see the numbers always in the media that the people are actually saying that it can last about 60 years, 50 years kind of thing. But this is actually kind of actually the same numbers that are very kind of probable number that you can see again and again. That's about 70 years where we live today. If we look at that history-wise, that how these reserves were changing actually with the time, because oil moves. If you have a oil in the ground and that oil not been taken out, even when it's being taken out or means it's extracted, it still moves. So these reserves actually kept moving over the time. If you look at that particularly Middle East, then back in 1988, they estimated about 120 years these reserves gonna last. And it's also dependent how quickly you can take out these production from these reserves. So now, right now, why it's a 70 years, about 1988 to 2018, this number is, it's going really quickly faster down as it had about 20, 30 years ago. Similar like that, that's other countries that some are moving up, some are moving down because new reserves are being discovered and it got added all the time. OPEC is a very, very important, has a very important position actually in the global oil reserves. Almost 80% of the oil reserves are with the OPEC countries. Rest of the reserves, about 20-21%, are with the rest of the world. So its position as a oil supply control, oil demand control, oil price control is very, very important. And you can see that one that these countries, every country or every member who is part of OPEC, they has a good position in the oil. They can control actually with the supply because they are located in different countries, different area in the Middle East and in Africa or the West Africa. So they can control, and some actually are part of the South America. So it means world over, wherever their oil can move, they can control because they can actually jam the supply, they can cut the supply, or they can increase the supply. So the 2/3 majority, if you have to become the part of OPEC, very important thing that being an OPEC member, if you have to become a member, and you can see that one, that why this is actually 5 to 14 members right now for since 1960, that that's all the countries need to approve, and that this country need to become a member of OPEC, and the 2/3 majority required to make any country as a part of OPEC group. So people treat this OPEC as also cartel, that because they can control everything about the oil, and oil is a kind of key of any economy in the modern world. Next. If we look at our global oil production right now, then how it goes, that where actually the more production is coming. So this is the top 10 countries in the world which are producing the oil. US is reaching about 20 million barrels per day. They have capacity there, though they have a capacity a little bit more on that, but they went up to that level. So this is about 2019 data from American energy organization. So Saudi Arabia, that they reached about 12.3 back in this February of March, and then Russia, Canada, China, Iraq, UAE, Iran is getting down due to the choking sanction on that, and Kuwait. There are top 10, actually, if you look at that, that's daily, the production coming out of these top 10 is about 70, 75 million barrels per day. Rest of the world there are about 117 countries in the world. They are oil producing, either small or big, and overall, that the whole world is actually producing about 100 million barrels per day. This is actually the numbers before COVID. After COVID, the whole world got changed. Another thing to add, this $100 million barrels per day also include the petroleum liquids and the biofuel, though, which is a very small. The rest of this more major part in that is the crude oil. Next. Okay, you guys can look at that. That's how this OPEC crude oil production actually based on their trillion barrels per day kind of combination, that how it actually started in 2018, and then how it moved to up to 2019, then how actually by quarter it's actually moving to that. So in June 2020, if you look at that, the production per day got dropped about 1.9 million barrels per day. Okay, let's a little bit get an understanding about how this whole industry works, because we always hear about these buzzwords, upstream, midstream, and downstream. There are three different actually types, stages from extraction of oil to the use of oil. So the extraction of oil, every industry or the companies that they are actually part of drilling companies, they are part of extraction and production of oil from the ground or from offshore, or even the shale companies. They are called actually under the group upstream group. Then oil comes out from the ground or from the water. It's not being used right away as is. So it has to go to the processing, and that's we know that's it's a refining, and the refining process is and the distribution that after refining, a lot of products get out from this crude oil, and it's then transported directly to the consumers at the retail shops and the retail gas stations. They are called downstream. The midstream is very important because here, without the transportation system, which can be either the pipeline, either can be the rails, roads, or the shipping. So these are very important means actually to ship these oil from upstream to all the way to downstream and to the midstream and to the downstream. Next. Okay, so let's understand a little bit more about this this oil distillation process, because we can see actually the different grades of oil or different kind of categories of oil is being produced in the midstream. That's here in the back. That's the midstream where the refining and distribution comes in. In the refining process, that's this crude oil goes in the refining system, and with the different temperature, the different kind of different grades of oil comes out, a different kind of products comes out, and every product has its own market. and they are actually based on the different temperatures. If you can look at that, there is actually about 7 different major categories comes out from this distillation process. The highest, where actually with the lesser efforts or with the lesser temperature comes out, is the liquefied petroleum, then the butane and all other these higher products, and they are expensive products. Then comes to the gasoline part that we use for our vehicles, our passenger vehicles. Then the third part that as the temperature actually going up and up, naphtha, that you can see all these plastic chemicals that made from the petrochemical products. That's the grade of oil that's used is called naphtha. Then when it goes to the higher temperature, 160 to 230 degrees Celsius, it's kerosene, the jet fuel that all the aviation industry use that one. It's further boiled up from 230 to 425, and the diesel and heating oil comes in. So you can feel that one as soon it's going down and down. It's getting more temperature, and what kind of the level of the oil, the category, the density, or the gravity of the oil would be left. So then it goes to heavy oil that the shipping companies use, and anything left after that is the residual fuel oil, so which is also used in different industries as well. Okay. Next one. On the production side, as we saw that one, that production, it's not kind of the ready-made things that as the crude comes out from the ground and then it goes to the midstream in the refining and right away goes to the downstream. There are actually stages that require that for this oil to be reaching to the customer. As we see that there are a lot of factors are involved in the production to using these oils, and sometimes oil is being produced less or more. So the storage is very important. So right now in the world, if we look at the overall capacity of this crude oil, there is a 15.3 billion barrels are basically stored as for the March numbers, March 2020. Usually this range, the capacity is definitely more, but actually usually the storage is 6.7 billion barrels that is being used actually for the oil. But this time, as likely the demand getting down and down with the COVID starting, the storage capacity got more used. It was very interesting that all these VLCC, that's long vehicles that carry the crude from one country to other countries or one region to other region. 1 out of 10 VLCC was being used to store the oil because the oil got produced, but there's nowhere to go because the demand was nothing. And the refinery were closed, so nobody was buying these oil. So right now, this oil production, that oil capacity we are using as a storage, it's lasting about approximately 82 days. Usually it varies from 41 to 50 or 60 days max. So you can imagine that as this pandemic started, more oil got produced, but nowhere to use. So now come to the global demand side. So how this demand works and how actually it grows with the different region, different products. Here's a chart that's showing actually where actually this most of the oil used by the region. So if we look at that on 2017 to all the way 2019, the oil used in Americas, when we are talking about the Americas, it means all the South and North Americas basically. Then Europe, the 26% of oil being used by Americas, then Europe 14%, Asia only 8%, then other developing countries about 33%. There's a lot of smaller countries. FSUs that the former Soviet countries, that's about 35 countries that they were former Soviet states, and they got actually blocked. to make a group of that FSUs. So they're 5%. Other European countries, that's 1%. China itself is actually using about 13%. So in 2017 to 2019, if you look at that, about 2 million barrels per day more oil being used, and because due to more demand of oil. So right now, if you look at that, so the consumption of oil over the year is about 36.3 billion barrels is used in the year 2019 by using actually the same 99 million per day. If you look at that, that's how much per capita. It's a very interesting data that when we look at the barrels used by per capita of the world population, so about 5 barrels per person is using actually on a yearly basis. And if you look at that, how much actually we are using on daily basis is about 0.6 gallons per capita of this oil. Okay, so another way to look at that, which industry is basically using this more oil. So the transportation, the roads, and they are using about 45%. Then it comes to aviation part, rail and water, marine bunkers, petrochemicals 14%, and other industry about 13%. Residential and commercial and agriculture, they're using about 11%. The electricity generation of the world only use actually 5% on oil to produce the electricity. So out of this 99.7 million barrels per day, this is actually the breakdown of that, how actually the different industry is using the oil. Okay, another way actually to look at that, that's how actually the different sectors are using actually this oil, and looking at actually the forecast. This is actually before pandemic, from 2018 to 2024, how actually the oil demand gonna look like. And if you can see, the road, aviation, and all those were actually going up and up. And in 2024, expectedly that the oil demand would be reaching about 104 million barrels per day for the different industries. Okay. Now look at actually this oil demand and how it's going to be growing by region. In the different region, that's when we look at the oil, overall world oil, or the different demands and supply part, the two major actually segment that we look at, the OECD and non-OECD. The OECD is basically the Organization for Economic Cooperation and Development, and the non-OECD, the other world part of that. So it looks like that the million per day on from 2019 to onward, it's now it's going kind of downward. It's with as the 2020 started, the oil demand was getting down, and if you look at that, it's getting negative now with the passage of time. Next. Okay, so the oil actually produced by most of the countries are exported. Some used by themselves, and a lot of oil is being exported. If you look at that, actually how this export comes up by origin, where actually the oil produced, and how this oil is going to be used, and you can see that one by 2040, where actually this oil million barrels per day gonna be. Asia Pacific, if you look at that, Asia Pacific is pretty much nothing. And Middle East is the highest one. And if you can see that one, the Middle East by 2040 would be still more exporter of the oil. But the rest of the countries like the Africa, Europe, Russia, and Caspian area, Latin America, US and Canada, they're actually oil exporting would be getting comparatively lesser than the oil coming from the Middle East. Next. Okay, so Another way to look at that, how these oil products, when on previous slides that we saw that one, that these oil products produced from the refinery, they are actually graded differently. So in the industry world, this actually is very important, which kind of category is being used for which. So this is a kind of demand growth from 2018 to until 2024. As we saw that one, that expectedly that the demand of the oil going to be 104 million barrels per day by 2024, if everything goes well. Because the question comes in, this pandemic, how far this pandemic can go? Is the vaccine going to be coming sooner, or it's going to be taking another probably a year or so? If it's going to be taking a year or so, definitely these numbers are not going to be same. So if we be positive that the vaccine going to be coming in and the thing's going to be going okay, there's no kind of really upset in the world, and everything goes as usual, then the thing's going to be like as per book. So the growth in the light products would be, as you can see, that ethane, naphtha, gasoline, jet, kerosene, diesel, gas oil, and all these have different actually consumption levels and demand as we are passing by. So the other product, if you look at that, that's as the other products. Other products means like the products made from the petroleum, basically using by the different categories of naphtha is used actually for the other products. So by 2024, this demand is going to be about 104 million barrels per day. Next. Okay, this another way to look at that, that's how actually the world consumption of energy is being met by the different kind of sources. Though it's not for the discussion today, but I just wanted to add that one to just give you actually kind of idea that how much this oil related part is the world energy consumption. If you look at that, the coal is contributing about 27%, still natural gas is about 24%, hydro renewables are about 7% only, nuclear is making 4%, and oil is about 34% of the world energy consumption still being met through oil. Some other renewables like the thermal part basically coming in the Nordic states and all those areas that where actually it's hot water comes out or the lava comes out from the ground and people use it for energy also. Next. Okay. So now we go to the pricing part. And this is a very interesting part. If we look at the pricing that since 2002 to date, how this actually the price moved. I just only picked up the WTI and Brent. You can see a moment that there are a lot of more than the WTI and the Brent. Why we say WTI and why we say the Brent. It moved actually, look at that. So it started from less than $50 per barrel. It moved up to back in 2018. It actually reached to $147, $46 per barrels, and then now it's going back again to about less than $50 again. So these are all swings in the oil prices that we can see actually over the time. There are sometimes pandemic, sometimes political, sometimes the demand and supply part, and sometimes different wars. All those factors actually impact all these prices. Here's actually, if we look at the only OPEC part, the OPEC actually back in 1960 when the OPEC started, that's you can see that one, it started with $1.63 per barrel. Back in 2012, 2014, it reached up to 109. And then actually it's now falling back to only $44 per barrel. Without OPEC, actually there's no oil industry because 80% of the oil prices, oil demand and supply, particularly supply and the pricing is driven by the OPEC. So that's why actually if somebody wants to actually do kind of research, then they have to start from the OPEC. Okay, there's a very interesting, the next slide, sorry. The next slide on the negative pricing part of that. We heard that one, and as Mr. Khaja also mentioned in the start as well, that the price actually a few months back that went to negative territory as well. There are actually, there's no actually kind of incident I can see that in last, my 24 years career, that the oil price actually went to that negative territory. Why it actually went into the negative? WTI, it's the West Texas Intermediate, and the Brent. These are two actually major oil categories or oil brands traded on the commodity exchange. WTI is traded on the NYMEX, and Brent is traded on the ICE London. WTI future price that went down up to $30.65 per barrel. Actually, the WTI means the oil coming in the North America is landlocked areas. It's not coming like a straight from the water, where you can actually fill the VLCC, these big carriers, and they can actually take the oil anywhere in the world. It's other part, South Samundar par hai ye wala, jo North America hai. So that's why they cannot actually take the oil right from the North America and ship it to the South America or to Asia or to Pacific and any other region. So it's difficult for them so far. So that's why actually if the production anytime goes up and the demand goes down, then the prices got suppressed. So, and same had happened because the demand actually drastically went down due to the pandemic, and the producers were continuously producing because they kind of shut the oil right away. And the wells, what they dig, the North American oil is also very kind of complicated in the sense because it's a part of shale oil, it's a part of oil sands in Canada, and you cannot actually shut down right away. So you need a kind of good lead time to shut them down. So in that case, and the producer kept producing, but the demand actually drastically went down. So nobody was buying actually the oil. The producer had to pay to buyers actually about $30.65 per barrel to buy their oil on May 29, 28 of this year. Though this impacted also the Brent side as well, but the Brent didn't go actually less than $20. And the big benefit to the Brent is, as you can see in this map, that how the Brent complex is coming from. It's coming from all the different areas of the world, right, other than North America. And you can actually easily ship the oil from one area to other area actually to be used for the refineries, that you can dispose it off. So that's why the oil still had a demand. Definitely demand was lesser. So, but it didn't actually reach the level that you cannot actually lock that one and you cannot actually use that one. So that's why the negative price didn't go for the Brent, but the WTI actually suffered. Okay, so here are some more kind of view about the pricing part. There are about 25 or more types of crude oils, types in the world that's differently with the different names and traded differently at the different commodity markets in the world. You can see it's a huge list of that. The WTI and Brent are the top, and they are changing actually every movement because the oil being used everywhere. So WTI, the normally in North America, the trading acronym used for WTI is CL. It's a light oil, and the BZ is used for the Brent, and the Brent is traded in ICE London. If people who have actually a little bit more insight about these how these commodities markets work, then they can understand about this ICE London and the NYMEX in the US. There are actually benchmarks used for the trading of the WTI. In a moment, I can explain that one. This is the physical and the financial part, so you guys can get a little bit better understanding how actually the financial and physical parts actually makes a difference in the oil world. On the Brent and WTI, they are good oils. They are light, sweet, and ideal for refining. So that's why they have a higher demand. WTI even more sweeter, more lighter. Of course, they're not drinkable. At the same time, Brent crude originate from the fields. So now this is actually a very tricky part. That the Brent crude that originate, as I explained a little bit earlier, that originate from the mostly in the North Sea and the Shetland island areas in Norway, close to the Norway. So it's a kind of easily that you can ship, you can produce, and it's a very near to the sea, so you can transport the oil anywhere in the more bigger regions as compared to WTI, because that's actually the U.S. oil fields. They are primarily in Texas, Louisiana, and North Dakota, where actually the area is more landlocked, and most likely that's oil is shipped either the rail, roads, or the pipelines, and then refinery actually are mostly in the Texas, are located in different areas. That so it's a kind of actually the timing thing as well, when it's being produced and when it's being used, so which also impact the pricing as well. So that's why the WTI has a disadvantage compared to the Brent. So the Brent right now, it's about 75% or 2/3 of the world oil is actually under the Brent complex as a benchmark. And you can see that one even on this chart as well, that the Brent is trading about 44.40 and the WTI is trading about $41.22 per barrel. Usually, when you can see actually at any time these markets, particularly ICE markets or the NYMEX for the Brent and crude respectively, so you can see that one that they are trading about between $3 to $5 spread. Spread meaning with the pricing differences. As I said, the OPEC is very important, and these are actually the different oil of the OPEC members, that what kind of oils their name of the oil is and how they are trading and how they're actually branding their names. Every country has its own name of the different oils they are producing. Okay, the next one. Okay, so now we come to interesting part, and we're getting closer and closer to that. The oil price is basically determined on the basis of two major things. And one is very psychological, and one is very fundamental. So the fundamentals has all other different factors. Psychologically, actually, as we see that in the stock market, the share goes up and down. Same is the case with the crude price as well. Psychologically, the market sentiments play a very important role in psychological pricing of the oil, which actually any tweet from the Trump makes actually the oil price up and down as well. So, so these are actually sentiment that impact the market. Fundamental part is the global, and it can be domestic. On domestic, like sometimes the oil within the Middle East or in US, actually there's different, and what's being traded in the world is different. On the global part, there are three very important factors: the demand part of the global demand, the OPEC production quotas, that which country is producing what kind of oil they're producing, and the geopolitics. When it comes to domestic part, there are 8-10 different factors that are considered actually that they can actually impact the price. The US oil inventory variance, they have a 5-year average. If any time that's inventory actually varies, it impacts the price. US has about 779 million barrels of reserves. So they strategically, anytime these strategic reserves change, it impacts the price. US GDP, that's impact the price. It's not only impact the price actually of the US, but also impact the price of the world. Withdrawals timing is very also important. Actually, when the oil was taken out or extracted from the ground and then went to the refinery or the midstream, and then it being used for the downstream level. Then comes to the US refinery capacity. Sometimes actually refineries are closed due to strikes or do all those other reasons, then it also impacts the pricing as well. US interest rate, the Federal Reserve actually fixed the interest rate in the US, and any interest rate up and down impacts our price as well. US dollar value, because US dollar is used as a standard currency denomination, or the currency in the world. So that's very important too. It impacts the price. A hedge fund. The hedge funds, there are actually, you can say about thousands, or no, it's about millions of hedge funds, different hedge funds used by the different commodity markets. If we're talking about this ICE and NYMEX market, then all these hedge funds, as soon they go up and down. A hedge fund has a more liberal kind of policy. They have a lesser restriction to trade the commodity as compared to trade the stock. So that's why they can actually make the prices up and down. And that was actually the major reason also for the WTI negative, because the volatility got really swung much due to these speculation that how the pandemic was coming and how rapidly actually it took the US part. Because in US that they were saying, okay, they were safe from the pandemic, that lesser and lesser people were actually impacted the pandemic, and then all of a sudden actually the shoot it up. So and the whole demand, actually the industry start shutting down. So that's why actually the production went up, but or stay consistent, but actually the demand actually went down. These actually volatilities and the speculation actually they makes actually the difference in the oil pricing as well. Then we come to actually the physical and the cash, that's called also cash or spot market. When any two parties actually they agree to either buy the oil at the spot or in the forward market. So that's called the physical market. The financial part, as I explained earlier, that's more on speculation based. They are more on the future based, that how actually the world, global, all demand, and all these factors it's mentioned here, that impact, and that's actually some of the financial market, WTI and the Brent prices. Okay, if we look at that, the last part of this presentation, that's the world economic, the GDP growth in the forecast. So 2020, if you can see that one, all these actually the growth in the globe and all the major economies, either emerging or the developed economies, they're actually all negative, their GDP. Okay, 2021 is a little bit positive forecast that though the globe would not be actually achieving about 5 or 6% of the GDP in 2021, but still likely it's a positive growth that forecasted in end of July. The major emerging economies, that particularly India, Brazil. Brazil is down to about 2.4% expected to grow. China and India, they would be growing about 6.8 and 6.9% respectively. So that's overall, if we look at the average, the GDP growth for the 2020 is expected to be about 3.7%. The forecast for 2021 is about 4.7% of the world. So of course, that with a lower GDP growth, it would definitely have a lower demand. So if the lower demand, it means oil prices would be more likely suppressed, and more likely supply would be available in the market. So people can buy anytime with a lesser price. Here's another actually way to look at that. That's the world oil demand, that how actually is moving with the OECD and non-OECD countries. That's about 8.9 million barrels per day in 2020 got contracted. In 2021, expectedly that's per day, 7 million barrels would be lesser. So it means if we are using about 100 million barrels per day, then it means about $93 million. That's the demand would be expected or forecasted. Okay, so here's a kind of quick look on the US economy particularly, because overall globe was difficult to cover actually in this short presentation. So how the pandemic impacted actually and the future actually of the oil. These are the indicators that actually can give you that how the oil would be. Look at the first quarter to fourth quarter, how this forecast is looking for. That's $45 to $44. So it means averagely this year, that's going to be 44. In the Q2, if you look, you can see that so the oil went up to about $28, the WTI one. The negative numbers are here, the spread between the different areas and the Brent and the WTI. 2019 to onward, if you look at that, pretty much the whole year of 2019, the average WTI was trading about $57. And 2022, the forecast is about, it's going to be about $65 max. This is right now the forecast. If anything or miracle happen about the pandemic or the things going to be getting better, then may actually the demand going to go up, the production going to be maybe restoring. But as the analysts and economists says that the world not going to be the same as it was before pandemic. So you can see that one, that's how the U.S. oil supply actually got curved in 2014 to onward. Here, there's another indicator that you guys can see is the rig count. When the oil is more demand, the more rigs that they are used for extracting the oil from the ground or from the offshore, they are being used. So if the rigs are getting lesser and lesser with the passage of time, it means the oil demand is not looking actually good. So as you can see, at least from this Baker Hughes US rig count, it started in from 900 to all the way to going to the 50 for oil and gas both. So from March 2019 to 2020. So here actually, this is the last slide. The global challenges for the oil industry. You can see actually in the media these days that all the big oil companies, they are called international oil companies. So now they are actually, now they are branding themselves from, instead of IOCs, they are branding themselves as IECs. Means it's a more integrated energy company instead of only oil producing companies, because the things are getting changed. More investment on renewable resources are coming up, particularly solar and wind. Global environment consciousness is increasing about the fossil fuel. People actually want this planet to be greener, and the world environmental groups, they are actually really more focusing on reducing the reducing actually the carbon footprints and the greenhouse gases. So that's why actually the more world is going to be using lesser fuel. The cheaper production of the electricity through renewable resources and the fossil fuel. We saw that when the electricity produced about, maybe use about 5% of the world oil production, or the demand is 5% of what we use on a daily basis. So as electricity gonna be coming more from the renewable, definitely, so that area would be also diminishing with the passage of time as well. So the CO2 emission initiative would be actually, will be definitely hampering the oil consumption as well. So, and some of the companies, they are saying that by 2050, they're gonna be totally zero emission, like the BP and all these big 5-6 big joints in the world, that they influence the whole economies of the world. On the maritime, there will be heavy restriction is coming up as also on the VLCC, because they use actually very kind of more density and more gravity of the oil that they use, that called heavy oil, by the vessels that ship from all these the different commodities in the world are either using actually these VLCC for shipping the oil, or they use actually for the transportation purposes for the material and the goods in one part of the world to the other part. So they are putting a lot of restriction by 2020. So they will be probably also be getting maybe lesser usage, or they're getting a restriction on that of usage of the VLCC in particular areas. So they're going to also reduce the demand as well. So electric vehicles and the lightweight trucks, that Tesla, you may have heard actually in the news that the Tesla is putting a lot of money on that and on the research on that. So if the more trucks would be electric truck going to be coming in the market. So definitely normal trucks and the normal vehicles not going to be used. Also, actually, the manless vehicles are coming in the market as well in few years, so that would also be impacting this oil industry as well. The aviation industry is also getting very concerned, and even the different companies, they actually putting a lot of restriction or kind of contributing to lesser travel by their employees actually from one place to other place by using the aviation to reduce this CO2 gases or the greenhouse gases. And the pandemic actually where the $30 million or disappear right away in a few months. And so these kind of the factors are challenges coming in the oil industry. So let's see, it will be definitely gradually shift. Being a part of this oil industry, though, the future, by looking at this slide, is kind of actually a bit concerning, but at the same time, we're positive in that because this oil definitely going to be used for some other purposes, basically maybe more crude to chemical going to be produced, or the different actually the products going to be produced from the same petrochemical instead of using actually right away these processed fuel or fossil fuel. So we definitely hope that the world going to be definitely better and the planet's going to be more greener as more science and technology going to be coming in place. So thank you very much for that. And now let's go to Q&A. I'm about maybe 10 minutes late from the planned part. So if you have any questions, so I'll be happy to answer.
May I? Thank you very much, Sohail sir. If you can open on your Zoom, there are several questions written by the participants. So one by one, if you can, please.
Okay. Okay. There are some questions about CPD. I need not to answer. I believe it's fine. Is in the road vehicle, while the expectation are show that there is a continuous growth in oil consumption. The question here is where, while the world is turning more toward the battery operated. Yes, I explained that one in the end, that of course that this going to be a lesser consumption on the transportation part. We saw that 45% of the world consumption is used by the road vehicles. So so it means if the road vehicle is going to be more electrically operated, then of course that the more consumption of this oil what we use today going to be lesser. But we have to not ignore this fact that if these vehicles going to be using the electric charging, then how this electric charging going to be coming? Either the power going to be coming from more solar or from wind, or in the next 30-40 years that this electricity going to be still produced from the gas or from the fossil fuels. So that's very important thing. Yes, there would be definitely consumption impact on that. The next one is, as the world prices are determined by the crude level, understand the value of the upstream raw farm, how can the layman understand the prices are set for the retail? Okay, yes. There's another actually the whole topic that we can probably maybe in coming months that we can talk about that. That's how actually the pump prices are determined. There's a whole actually area that on the downstream prices actually how they're determined. I initially thought that one I can add actually in Pakistani perspective on that the people actually paying the higher prices are in the different part of the world. They're paying a lot of higher prices on that. In the Middle East, we are using actually also the high prices. Sometimes it's going up and down as well these days. About 20-30 years ago, that's our 10-15 years ago, the prices were not as fluctuating as they are doing today. There are a lot of actually factors that are involved in the pump prices. There are actually benchmark prices in the world, as you saw in my different slides, that in the upstream to downstream, there are processing costs. The different region has a different processing cost of the refining, environmental taxes. And then when it reaches actually the customer level, there are a lot of actually government taxes are involved. And these are kind of direct taxes the government can get because the fuel is kind of the key or the backbone of any economy. People have to actually fill up their tanks to do the transportation in any form, either rail, aviation or the road, the trucking or anything. So they are shipping. So people that the government actually, that's easy money they can get right from the pump prices. So in different countries that it ranges from 10% to all the way to 40, 50%. Canada, that's and the big oil producer number 3 in the world, but the pump prices are higher compared to any other countries like Middle East or anywhere, because the government actually takes a lot of taxes on that. So the next question is about comparing the fuel cell and downstream in the KSA in Pakistan example. How a comparison based on quality can be made? Example in KSA 90, yes. So 99, 91, and 95, these are actually the different categories or the grades of the oil used in the downstream or the pump level. They have more sulfur, less sulfur, more lead contents, less lead contents. So how actually these prices are determined, even in US and Canada, these are 3 categories that are being used. One is 85, one is 91, and 95 or 97 that's being used in the different economies. So depending, Pakistan actually, if we are getting a more refined product, like high octane, high octane, then definitely the price would be higher, because it would have actually lesser sulfur and lead components in that. So it would be definitely more expensive. So we compromise, or we kind of offset that the pollution in our economy, but we also be paying a little bit lesser cost of that. So that's the things are coming up as the things are going to the more solar, wind, or other renewable resources. And Pakistan, alhamdulillah, is very rich in renewable resources, particularly the solar part. Wind part is also in this southwestern and these Sindh areas, where actually we can use actually these resources to get these electricity produced and all these fuel produced from there. So maybe that can bring actually lesser stress on the pump side. So people are going to be using actually lesser transportation and lesser commuting. So that can help them out. The next is why crude oil prices hiked suddenly after 1970. What was the reason behind that? I believe that's after 1970, 79, 73 was very important era in the oil pricing. 1973, there was a Arab war that Israel actually, they took actually a lot of Arab areas that what actually right now within next with Israel, particularly Palestine and some Jordan areas that they took it over. There were some actually next area of the Syrian side, the Golan Heights that we hear in the news. So 1971 or 72, there was a Islamic summit happened in Lahore, and if the people who are from Lahore, they can see actually called the Charing Cross intersection, where they have actually the big the plate is there that about this conference. So 1973, all these Muslim countries, they attended the Islamic conference. They agreed to actually stop, because this is a very, very powerful weapon to use that one to tell those countries that which were allied with Israel to actually support in their war against the Arabs. So they stopped that one, and that's why actually the prices went up, because they were not supplying that supplying this crude or the oil to U.S. economies or the different economies, particularly Europe part of that. So that's why the prices went up. And 1973 was very important around that. 1979 also was Iranian Revolution, when actually and the sanction got started right away, then war got started. So the prices actually spiked much about that. So it's got to kind of use more political tool, more rapidly and more stringently to actually raise the prices and to get the benefit of the higher oil prices. Paid and powerful contributing this by instead of speculation. If you look at actually the both side of the cost side, there is a cost. That's the cost side is what usually it's the same components where we use actually in costing of any of the commodity. That's like the reserve part. There are a lot of actually government royalties are involved, in particular US and Canada, because the land is owned by the government and are the people, and the people got paid, or the government got paid a lot of royalties involved in that. The rest of the stuff is like extraction costs, transportation costs, and then the processing and the shipping cost involved in that. So, but the speculation comes in because the word, if the physical, only the physical oil exists, then it would be kind of the no speculation. But these markets back in 1970s, I believe, that these speculation got started, and these markets got getting more powerful to not only actually use the physical, but also these derivatives that what we hear today, the swap and options and all those things got more refined with the passage of time. And these all different financial markets got coming into place, and more heavily actually speculated traders coming to trade the commodities. Previously, even that's a the people that who know actually are you who worked actually are lived in North America. Even the livestock that what we see actually in Pakistan or in the developing countries, that they are traded. The coal is traded. That's gas is traded. Not only actually physically, but also on speculative basis as well. So we are still behind actually in the speculation part of that, though it's a impact everybody, but at the same time, people make a lot of money. And being the finance guys, I believe speculation is a kind of very important factor in that. So how would the production shale impact? Okay, yeah, very important question. Back in 2014, when actually the shale oil got started actually booming up, and the world oil supply actually went up, and then all these OPEC countries got actually their share going to be taken off from the market, because the more supply was coming in, and they were getting difficulty in getting actually capturing it in the market, or the sustaining in the market. So that's why oil minister of Saudi Arabia, because that's a higher production, they have about 10 to 12 million barrels per day. They dropped the price. They dropped the price because the shale is more expensive to produce as compared to the cost we have actually in the Middle East or the OPEC countries they have. Because it's easy oil, the shale has a more cost to get the oil out. So that's why the shale prices would not be able to compete if the price goes down. So there's no exact number that I can tell you about the shale oil, how much the price is, but the price is basically about $35 to $40. They said if the price stays, then the shale oil can survive. If it goes lower than that, then they're going to be losing a lot of money. And you see that in the last few months, and how these rigs dropped on one of my slides that I showed. So could it be a major driver for restricting OPEC to increase oil prices for the certain level? Yeah, it is actually the shale. That's back in 2014, this war started, and you saw that when the oil price never went actually after 2014 or 15 up to the 100 or some sort of thing, that the max it went to about maybe 70, 72, 3, but it came back about 60, 65, 70, and now it's pandemic, it's about $40, $45. Are oil prices of natural gas connected with oil? Up to a certain extent, right? The natural gas is basically not a political kind of commodity. It's the oil is a highly political commodity, and the natural gas is not as is, because natural gas is usually it has a particular cycle that people use for heating, particularly in North America or the coldest countries in the world, where it's being used. Or for the electricity generation and all those things. So it has some relationship, it has some spread, but you cannot say it's 100%, it's not 100% correlated. Or there is any correlation, yeah, I explained that one. Then why Venezuela crude oil production is low as compared to Saudi Arabia? Okay, Venezuela actually are undergoing actually the same वो क्या कहते हैं US के औताब के अंदर है ना कि US is actually put a lot of sanction on Venezuela as well, because after the South American Revolution, the US actually they lost a lot of actually territories in the kind of the domination on the South American countries, particularly after Cuba, and then what was the name of the guy that before this Venezuela president? So they were against the U.S., and whoever is against the U.S. definitely they have to pay a big price for that. So that's basically the reason, the political reason for that. And the Venezuela actually they got actually a lot of these sanctions as well. So that's why they though they have highest reserve, but getting out of these reserves is very important. So as it's not going out, so that's why their production is lower than Saudi Arabia. And alhamdulillah, we got a good conducive kind of relationship with the US. So we are fine with that. Give guides for the trading in oil and related options. Where you want to trade, actually that's depends that you want to trade in the different sophisticated markets, or you want to trade actually in Pakistani market. I believe we have in Pakistan there's mercantile exchanges, but I'm not sure that they trade oil or they have actually a lot of these standards that have been built up so far, because the oil is not a major product we have. Being an oil trader or being a gas trader or these commodity traders, yes, you can trade in the different in the world, but there are kind of different categories of the oil and these commodity traders. So you need to be actually you cannot be independent actually as a simple oil trader. You're sitting at home and you're trading. Yes, there are actually related to the products of the stock products that's called ETF. You can trade that one. That's underlying product is oil. And those ETF or exchange traded funds that you guys can use to trade in the oil. So whenever the oil price can go up and down, they'll be impacting these ETF, that's these stocks that's related to the companies of that. So you can buy the companies, the stock that who are actually producing or trading the oil, like in Saudi Aramco, they did the IPO last year, and everybody pretty much bought. So any actually penny goes up and down in the oil price now, it's impact on the Saudi Aramco share as well. So it's a more exposure, and depends actually how much actually the risk you would have. That's the trade on the oil, and kind of take actually the investment into your portfolio. But yet you can mix that up through ETF, so it's going to be lesser risk as compared to actually be only exposed to only oil company or gas company. So you can mix and diversify your investment with oil through ETF. So from investment perspective, okay, that's fine. Best site for oil price forecast. There are many actually sites on that. So you can go on even the OPEC site, and you will see actually a lot of these information available, and they have a very, very good site. You can see actually a lot of my slides, they were actually sourced from that site as well. So I'll be happy if you need more information, then I'll be happy to provide you. Okay, so what is the impact of COVID-19 in Pakistan? The OMCs, that's the oil companies, shows heavy losses. Yeah, so there could be definitely, that's not only the Pakistani companies, but actually a lot of these companies in the world, they actually sustain a lot of losses actually due to this COVID-19. So the Pakistani companies are not only actually the reason for this COVID. The COVID impacted everything, because the drastic decline in the demand, and investors, people were not getting out, people were not actually more involved, and the people start shifting now the gold, as you referred to the gold, rather than investing in the PSX, because the risk, that's because investor being investor, wherever you want to risk. So, and how much you are risk taker. So the gold and the oil, though you will not see actually on the media, or there are some actually literature that you can read on online. That's whenever the oil prices goes down, people start actually shifting actually towards the gold. So, and same is the case when the gold going up to the level, the oil prices as soon start picking up, the gold gonna be declining. So there are some correlation, but it's not fully or 100% correlated. Yes, there is. So, and hedge fund products when subject matter is oil. So when we're talking about the hedge fund, yes. So you can hedge, you can buy gold, and if you have an oil investment or you have investment in the oil companies, you can buy gold. You can actually make money on that, and you can lose money on the stocks of the oil companies. So you can hedge that one. Yes, there's no perfect hedge in the world that you can say this 100% hedge. You cannot put actually wall against any of the calamities coming in the world. So there a lot of things are not in the investor control. So that's why hedge fund products are important. You can actually mitigate the risk up to a certain level, but you cannot eliminate the 100% risk. So there would definitely some exposures. So how quickly or how effectively you're managing your portfolio, that's very important. And as I said, the oil companies are always risky, at least if you're spending all the money in that. If Canadian government reduces, it takes a fiscal regime and play on quantity, will it not make oil industry viable? Sorry, I didn't understand this question. The Canadian government, yeah, Canadian government has different policy right now after the Liberal government came into the power. After the Conservatives, they have a lesser focus on the oil reserves or the oil production in Alberta. Compared to they have more another diversified green economy part of that. Another issue is that Alberta oil produced is only mostly used by North America, particularly US. US is the biggest buyer of Canadian oil. And if we don't have actually a lot of pipelines, and those pipelines, a lot of projects within a province or within the US and Canada are halted due to the environmental issues, and the environmental groups are very strong over there. So that's why it's a kind of challenging for the Canadian economy. And the oil sands are kind of, the Canadian oil sands are highly contributing in the GDP of the Canadian economy. So of course, there will be definitely some impact on the industry as well. And if Canadian oil going to be lesser, now they are number 3. If they're going to be lesser producer, definitely that's the other countries going to be kicking up more. Like if the Libya situation gets improved or Iraqi situation gets improved, then definitely the more are going to be coming into the market from this side, or the shale going to be taking over. So this is all likely. That's what I said. That's the highly political commodity. Sanctions in Iran and Venezuela. That's also part of this market capturing in the different part of the world for the shale oil. So it's a kind of likely political tool that people use. It's a great to share on WhatsApp group. Yes, if you are a part of the WhatsApp, that's and part of the group that the KSA these management group is, that no problem. We can share that one. That's fine. Please send the presentation. Yes, you'll be getting that one. That's it. So these are the questions. Anything else?
I think all are addressed in true letter and spirit. I would say it was a very comprehensive session. So I will hand over to Mr. Asif Naz, Chairman, KSA Branch Council, for his final vote of thanks. Thank you very much, sir.
Thank you, Khwaja sir. And thank you very much, Sohail, for your time. Great information we found at one place. Otherwise, to get this information, we have to struggle everywhere, left, right, and I don't know how many websites. But you made it possible in one presentation, so at least a lot of information is there. So really, thank you very much. And I would thanks to all the members. The current participation went to 71 participants. It was great. Although it was the office time, we started at 5, so many people in the office, and they could not join due to these timing issues. As the branch council has not any mandate to conduct the seminars due to the legal status in Saudi Arabia, so thanks to pandemic, that made it possible that we can conduct the webinars and seminars online through Zoom and Teams. So this was the first event that was conducted with the help of Sohail, and I believe it was great. And I would request all the members who are currently participating, if they have any expertise and they would like to present anything, or they know any other speaker who have a great knowledge, and that can be a good informative for us. So kindly share the information with me or with any branch council member, so we can contact the speaker and can arrange another presentation on the respective subject. Thank you very much. And in the last, I would like to thank to Asim and the team sitting in Karachi, making this event possible. Thank you very much.
Okay, as a last word, thank you very much, Asif Saab and Khalid Saab, and I appreciate for all the members of Saudi Branch Council as well. And also very thankful and grateful for our Asim Saab, Nisa, and other IT team that who are helping to make it possible. Also the president of our institute and the branch council members and the national council members. So who actually always actually were very supportive, actually were encouraging actually to come up and to present something that what we already have. So inshallah, this is a good initiative from the KSA branch, and we'll try to continue this momentum.
Thank you all, and see you soon again. Thank you very much, all the participants. Assalamu alaikum wa rahmatullah, and have a nice evening. Assalamu alaikum.